Hi everyone, welcome back. I'm Jorge, and this is my 2021 investment challenge. I'm trying to go from $150 to 1,000. We'll see how long it takes. For today, the markets were down. The Dow Jones was 177 points down. The S&P 500 was 27.29 points down, and the Nasdaq was 114.14 points down. For my portfolio, I was 2.64% down. That's $4.50. So I'm going to scroll over here and you'll see that I'm still making a profit of $15.87 overall, even though today I lost about $4. And that's because I bought APXTW at 397. So I'm still making a profit. It's a 16% profit on it. So this brings us to a good point. When the market is down, don't panic, because you only lose money when you sell. So as long as you don't sell, there's always the next day and the next week when it can go up. Sometimes when the market is down, that's when you buy, because you get a lot of stocks at a discount. So let's look. For example, let's look at the chart of GRWG. So look at 3 months. So let's say that you went in right about here. So it's about $22, right? And then it went down to like 19 and you sold because you panic. But then guess what? Look at this big jump that maybe you could have bought 20 more shares or something, right? Added a little bit more money, and then you go up. But see how this chart is a little bit extended, but you see it goes up and down, up and down, up and down. So another rule that goes with trading is don't chase, or FOMO, fear of missing out. We can look at this other stock, Hyliion. Look at the 6-month chart. See, like right here, let's say people were looking at it, they didn't buy it, and then they saw that it made this huge jump. But look how vertical it is. It goes straight up. That's not a good sign. Why? Because it comes a big drop right here. So some people will be like, oh, let me get in it. They get a $53. And then all of a sudden it takes a couple of jumps and then straight down. So that's the fear of missing out, buying all the way to the top. See, like here, it already kind of settled down over here, so it might be a good time to buy. But still, you never know. But yeah, like whenever a stock goes really, really high, really fast, it's not a good sign, because most of the time there's a big drop. Every now and then it'll keep going up, but you don't want to take that risk. Also, another thing that new traders need to know is don't trade penny stocks. That's any stocks under like $5. You will lose probably 90% of the time. So you might say, oh, but we're on APXT. APXTW, isn't that under $5? Yes, it's under $5, but APXTW is not the stock. Those are warrants. The actual stock, it's 1645. So that's not a penny stock. So you're going to say, so why would somebody buy it at 1645 and not at $4? $4.56. Well, because there's risk with warrants. I mentioned it before. Basically, this is a SPAC. A SPAC is when an investment group is merging with a company to introduce them to the stock market. It's a new way of companies going public. So at this point, before the merger, the warrants are at its highest risk, because if somehow the merger doesn't happen, the warrants go straight to zero value, while the stock right now, it's at 1645. Anybody that owns that stock will get $10 back per share. And like right now, if somebody bought it at 16.45, well, they would lose $6.45 per share, but they would get some money back. So that's the risk that you take. But since I'm only starting with $100, it's a high risk, and I'm okay with it. And that's why you should look into investment before you trade stocks. Be okay losing some money to gain a lot of money, and that's basically the risk. So after APXTW, we're gonna actually start looking. Well, I'm gonna start looking at SNPR Plus. That's another investment group that is looking for a company to merge. They haven't found one yet, so that's even riskier because they don't have a company yet. But that's why it's $3.21. Usually the SPACs work like this. They'll start trading between, let me see if I can pull up the chart. No, it's not working. So they'll start trading between $1, $2, and then as time goes by, they'll jump maybe to $3. And then once they find a company and they announce, hey, we found a company, or we found several companies that we're interested in, it'll jump to about $3, $4. And then from there, once they announce, oh, we're going to merge with the company, it might go higher. So that's how they work. Then once they announce a merging date, you're probably looking around $9, $10. It all depends on the hype. If people actually are interested in the stock or the warrants, they'll go and they'll buy more, so they'll drive the price up. So that's when you get the most profit. So again, for APXTW, we're looking for a merger in February already. They're going to announce a date, and then I'm expecting a jump to probably maybe 6 or 7 when they announce the exact date. And then when it gets closer to that date, probably between $9 and $13. And at that point, I'm going to sell. I'm going to sell probably maybe 3 to 5 days before the merger. And I'm just going to take whatever profits and take them to the next trade. I've done a few of those, and usually right after the merger, the companies take a dive. We'll go to Hyliion. Let's go to the 3 month, actually 6 months. So see that was Hyliion, and the merger was around this time right here, and then it just took this big old dive. So just be happy getting some profits, around here. You don't have to get them right at the top. And that's how I'm planning on making it to $1,000. So thank you for watching. We'll try to give you daily updates, and we'll go from there. Let's see if we can reach our goal of $1,000. Thank you. Have a good night.